Hold on to your remotes, folks. Netflix is on fire. Their stock just went through the roof. Why? Oh, just a casual 14% jump in pre-market trading. The reason? A tiny thing called record subscriber growth. They added a mind-blowing 18.9 million new subscribers in the last quarter of 2025. Wall Street? They were expecting less than half that. Oof! This, my friends, is what we call crushing expectations. It's like Netflix went to the streaming buffet and cleaned everyone else's plates, and then ate the table. This isn't just good news for Netflix, it's a testament to the power of streaming. People love their on-demand entertainment, and they're willing to pay for it. Even if it means giving up their daily latte, maybe. Let's talk numbers, people. Netflix is giving Wall Street plenty to be excited about. We're talking record revenue and impressive profits. $10.25 billion in revenue isn't a fluke, it's a trend. Netflix projects $43.5 to $44.5 billion for the year. Their operating margin in Q4 2025 was 22.2%. For the full year 2024, it was 27%. The future is still bright for Netflix. Okay, here's the part where some of you might clutch your pearls. Netflix is raising prices. Gasp. I know, it's a tough pill to swallow, but hear me out. These price hikes are not some evil plot. They're necessary. Think of it like your favorite restaurant raising burger prices, costs have skyrocketed, they're just trying to stay afloat. The same goes for Netflix. Creating shows and movies isn't cheap, neither is securing streaming rights and live sports. All of this costs money. Enter the price hike. So, how much more are we talking about? The ad-supported plan is going up $1 to $7.99. The standard ad-free plan is increasing by $2.50 to $17.99, and the premium plan is jumping $2 to $24.99. The extra member add-on is now $8.99. Is it ideal? No. Is it the end of the world? Also, no. Section 4, Buyback Bonanza, $15 billion back to shareholders. Hold on to your hats, investors. Netflix just announced a $15 billion stock buyback program. That's right, billion with a B. Now I know what you're thinking. John, what in the world does that even mean? Well, my financially illiterate friends, let me break it down for you. A stock buyback is basically a company using its profits to buy back its own shares from the open market. It's like giving a big fat bonus to their shareholders. Why? Because when a company buys back its own stock, it reduces the number of outstanding shares, and when there are fewer shares available, the value of each share goes up. It's basic supply and demand, folks. Now this $15 billion buyback is a pretty big deal. It shows that Netflix is confident in its future. They're basically saying, we believe in ourselves so much that we're willing to bet billions of dollars on it. And that confidence is contagious. This move is likely to make investors even more bullish on Netflix stock, and that could lead to even higher stock prices. It's a win-win for Netflix and its shareholders. Well, unless you're shorting the stock, in that case you might want to look away now. Section 5, Subscriber Surge, why everyone's joining the party. So we've talked about the stock surge, the financial performance, and the buyback program. But let's not forget about the real reason Netflix is killing it, their subscribers. They added a record 18.9 million new subscribers in Q4 2025. That's like the entire population of Australia deciding to binge-watch Stranger Things at the same time. But what's driving this massive growth? Well, it's not just one thing. Netflix has a knack for creating addictive content that keeps viewers glued to their screens. From critically acclaimed dramas like The Crown, to laugh-out-loud comedies like Sex Education, Netflix has something for everyone. And let's not forget about their ever-expanding library of movies. They've got blockbusters, indie darlings, documentaries, and everything in between. They're basically the Blockbuster Video of the streaming era, but without the late fees. But it's not just about the content. Netflix is also a master of marketing. They know how to create buzz, generate hype, and get people talking about their shows. From social media campaigns to influencer partnerships, Netflix knows how to reach its target audience. Section 6, Live Events, the Future of Entertainment. Remember when Netflix was just that company that mailed you DVDs? Yeah, those were simpler times. Now they're diving headfirst into the world of live events, and it's paying off big time. In Q4 2024, Netflix dipped its toes into the live event pool with 2 NFL games, a Jake Paul vs. Mike Tyson boxing match, and the highly anticipated return of Squid Game. And guess what? People loved it. The Jake Paul fight alone drew a staggering 108 million viewers globally. That's more than the Super Bowl. Kind of. Now, before you get too excited, Netflix isn't about to become the next ESPN. They're not interested in bidding for massive regular season sports packages. They're more focused on can't-miss special event programming, think one-off events, exclusive concerts, and maybe even live theater productions. And there are whispers that Netflix is eyeing a potential bid for UFC rights. Can you imagine the pay-per-view numbers if they managed to snag that deal? It would be insane. So, while Netflix is still primarily focused on on-demand content, live events are definitely a part of their future, and it's a future that looks very bright indeed. Section 7. Netflix versus the world streaming wars rage on. Let's not kid ourselves, folks. The streaming wars are far from over. In fact, they're more intense than ever. Netflix might be the reigning champ, but they've got a target on their back. Everyone from Disney Plus to HBO Max to Apple TV Plus is vying for a piece of the streaming pie. But Netflix has a few key advantages. First, they're the OG streaming giant. They've been doing this longer than anyone else, and they've got the experience and the data to prove it. Second, they're global. Netflix is available in over 190 countries, which gives them a massive potential audience. And finally, they're not afraid to spend money. Netflix is investing billions of dollars in content, technology, and marketing. They're constantly innovating and finding new ways to improve their service. But the competition isn't standing still. Disney Plus is leveraging its treasure trove of beloved franchises. HBO Max is banking on prestige TV shows and blockbuster movies, and Apple TV Plus is luring big-name stars and creators. So, who will win the streaming wars? Only time will tell. But one thing is for sure, Netflix isn't going down without a fight. They're the streaming giant for a reason, and they're not about to give up their crown anytime soon.